Stop loss, as the term suggests, is a strategy to stop further losses. It's a predetermined level at which a trader decides to exit a position if the market moves unfavorably. It's like a safety net, designed to limit an investor's loss on a security position. For instance, if you buy a stock at $50, you might set a stop loss at $45. This means if the stock price falls to $45, your position will automatically be sold, limiting your loss to $5 per share. A well-placed stop loss can be the difference between a small manageable loss and a catastrophic one. Now let's move on to risk management. Risk management in trading is the process of identifying, assessing, and prioritizing risks. It's about making calculated decisions and taking only those risks that you can afford to lose. It's not just about making profitable trades, but also about protecting yourself from severe losses. It involves setting your risk tolerance, which is the amount you are willing to risk per trade, usually a percentage of your trading capital. A good rule of thumb is to risk no more than 1 to 2% of your account on any given trade. Lastly, let's explore the role of psychology in trading. Trading, at its core, is a mental game. It involves a constant battle between fear and greed, discipline and impulse. It's essential to keep emotions in check and avoid making impulsive decisions based on temporary market fluctuations. A successful trader is not swayed by the euphoria of wins or the despair of losses. Instead, they maintain a balanced state of mind, focusing on long-term strategies and consistent profits. In summary, the importance of stop loss, risk management, and psychology in trading cannot be overstated. Stop loss helps limit losses, risk management ensures calculated decision-making, and a sound trading psychology keeps emotions in check. They form the pillars of successful trading and are the keys to longevity in this volatile and often unpredictable world of trading. So the next time you dive into the trading pool, remember to carry these 3 essential tools with you: a well-placed stop loss, a robust risk management plan, and a disciplined mindset. Your trading journey will thank you for it.